Hello and welcome to etbfsi.com by the Economic Times, and you're watching FinTech Diary, the reputed and the far recognized show specifically about the fintechs. The world of fintech is evolving constantly, and in the FinTech Diary, we try to map these changes for you specifically in this particular show. My guest for this chapter is Anish Achuthan, co-founder and CEO Open Financial Technology, which is the fintech company. Anish, glad to have you.
Thanks, Amol, for having me on the show.
So good to see you, Anish, and glad to have you as well. So let me begin by asking you, where are you today? I understand that you started Open 20 in 2017. Now you also own a payment aggregator's license. A lot of changes have also happened in the industry, specifically in last 2 years. Forget even the last 4 years, the regulators have been active. So considering all these changes, where are you today?
So, Amol, as you rightly said, yeah, we started in 2017, and obviously a lot has changed in the last 5-6 years of our journey. Today, we provide a financial OS that powers over 4 million SMEs and mid-sized businesses in India. We power our enterprise solution to 12 out of the top 16 banks in the country. In a year, we process close to 40 billion US dollars of transactions for our SMEs. And we are grown to like a 500-member team in the last 5 or 6 years of our journey.
Okay, sure. That's an achievement, Anish. I also understand that you have been an economic, you have become an unicorn now, right? So, how has things changed specifically for you once you become an unicorn? Has the approach from the investors changed? Has the approach from the employees also changed? Are they started asking you for more hikes, raises in their packages, and how has the industry started treating you after you becoming an unicorn?
I think apart from the probably the media attention and the industry-wide attention that we got, being the 100th unicorn in the country, apart from that, I don't think nothing much has heavily changed for us. Obviously, this leads us to a lot of international prospective partners like the banks reaching out to us. But as well as the team, the employees, the partners, I don't think nothing much has changed. Obviously, once you become the unicorn, and especially in the last 2 years, heavily there is a lot of attention on how unicorns, profitability, and all of those aspects. It brings more, brought in more responsibilities, and probably we are also now more in the media eye than ever before. So those are the things which got changed for us. Otherwise, like life is the same, probably.
So, what are your focus areas now, Anish? Generally, the large companies or the traditional companies take some time to grow. But as they say, fintechs don't have enough time, in terms of speed of innovation matters, the speed of raising fund matters, profitability matters. So you have been there since in the industry since more than 5 years now. So what are the areas that you are going to focus on? What are the areas that actually makes a big difference for you in terms of the revenue streams and the business segments?
So over the last 5 years, when being one of the first player or the first movers in the space that we operate in, it was like a challenging journey, and it was more about building the platform and the products on one side while we continue to acquire customers on the other side. That was probably what defines us for the last 5 years. But now, since the product is like in full shape, definitely the first priority for us into getting into a profitability that is around 6 to 8 months away from now. That's what one thing which we're working on. Second is monetizing the products and the platforms that we have built, because in the early days, while we're focusing a lot on growth, a lot of services were offered free to the customers, and then as now the full platform is ready, we started monetizing those functionalities. Third is during this journey, we also realized that while we predominantly were always like a direct to SME business where we acquire the customers directly, we found that our solution was in demand for a lot of those banks which were trying to revamp their existing internet banking platforms. And in many of the larger banks, we replaced their existing internet banking platform with open things. So as I mentioned, we have 12 out of the top 16 banks, whether it is SBI or HDFC or Axis or ICICI, now offering the solution to the customers. And that has become like a bigger distribution channel on one side, as well as an enterprise platform for the banks as a sales channel as well. So definitely that is one area where we are heavily focusing on currently, like, riding on the growth that we have seen from these banks. How do we expand to more banking partners? How do we actually make more banks distribute our platform? So profitability, focusing on the enterprise banking as a segment, and the third is obviously, like, growing our existing base of customers. So these are the three core areas on a high level which we focus on, right?
Could you just, demystify and also explain me more in terms of, what is your core business right now? You're dealing with banks, you're dealing with a lot of merchant SMEs, So what is your core area and what is the solution that you're offering, Anish?
So we started out solving the challenges finance team faces in finance teams in smaller companies, SMEs, and mid-sized companies face when it comes to managing their finances. Because if you really look at, like, today, a finance team has to deal with a bank account, they have to deal with an accounting software like a Tally or a QuickBooks, they have to deal with a payroll software, they have to deal with a payment gateway. Now, reconciling all of the systems at the end of the day takes away, like, a lot of their time and energy. So what we did was, like, we brought in an integrated platform wherein you can link your existing bank account so that it becomes like a single internet banking dashboard, which means, like, if you have an SBI account and an Axis Bank account, you have like one single dashboard where you can view the balances, do fund transfers, and more importantly, you can integrate with your existing ERP systems like Oracle NetSuite or a Tally. You can integrate your payroll so that you can manage your entire account receivables, your payables. You can connect with the GST systems. You can manage your, so this becomes like a financial OS for the the SMEs and the entrepreneurs and the finance teams. So that's our core business that we do. So our value proposition is in automating the finances for SMEs. Now, one point I just also wanted to highlight is that many times, like, when it comes to the media, we are always categorized or called ourselves as neobanks, a company which is trying to offer bank accounts. But primarily, majority of our business is in allowing a customer to connect their existing bank account and use this platform. Now, while we offer this as a direct to or a B2C solution or a direct to SME solution where we acquire these SMEs or businesses directly, what we also started white labeling this solution to the bank. So a bank like an Axis would offer it under the brand name called Neo to their customers, wherein then their solution is actually managed by Open, but just the branding becomes that of the bank, or an HDFC calls it as Biz Express. So that is an enterprise business which I was talking about, where banks were feeling that all this while we are offering a plain vanilla internet banking with just balances and fund transfers. Now, by offering a solution or white labeling something like an Open, we are able to offer more value to the customers, and based on that, get more insights about the customer's cash flow, which can be later used for lending, wealth management, other things. So that's the second line of business, basically. But it's actually the same product. It's just that we have the enterprise version, we white label it for the bank.
But how has the market changed, Anish? Because a lot of companies, specifically the fintech companies, are kind of replicating the similar models. Sometimes, if you look at three companies together, perhaps you will not even find a difference between A, B, and C, because almost all of them are offering the similar products. So how has been the competition and how are you dealing with it?
So definitely the early mover advantage or the first mover advantage in a challenging market, that actually helped us a lot. For example, like, the core strength of our business is the connectivity that we have built with each of these banks. For example, a bank like SBI. Now, how that happens is because of, like, by offering these banks a white label or an enterprise solution, we get access to their infrastructure. So today, like, we have the largest coverage of the banks on our platform compared to the peers in the industry. Like, you can, all the top 16 banks from an HSBC, even international banks like an HSBC or a Standard Chartered user, you can come and link the account. So that's where one key strengths that we have in the number of, like, we call it as connected banking, or the connected banking partners that we have. And other part is the strong distribution network where the bank distributes the product to their customers. So there is a difference between a fintech directly trying to sell this to a SME versus a bank, the branch guy going and talking about the bank's own product, basically. So these are the core strengths that we have, and probably I don't think we do have any competition on the white labeling or the enterprise banking space, whereas on the direct to SME space, yes, there are a lot more players coming in. And as you rightly said, the entry barriers also have reduced significantly. If earlier it used to take like 3 years, 4 years to go live with a bank, convince a partnership. Now probably that has reduced with some of the banks, wherein once they go through this journey, then they can actually expose to other peers. And we do believe that more and more players coming into the market, there is a larger opportunity, especially on our segment, on niche focused opportunities for new entrepreneurs or even competitors to tap into it by creating segment specific focus. So if you really look at the overall fintech, yes, there is there is a lot of saturation that is happening. Like there are like too many lending companies on both on the lending consumer side. There are too many payment gateway specific focus companies. But when it comes to the financial automation service, I would say probably it would be like two or three major players focusing on that area. So I would not say this is like heavily saturated compared to some of the subsegments in the fintech we see.
So you have been very aggressively operating into the payment space, Anish, and we partly discussed about the competitiveness in the payment space. But you also, I think, partly mentioned, if I'm not wrong, that 6 to 8 months is your goal to become profitable. Is making profitable in payment space really possible? Because one, lot of payments are there, companies are there. Second, lot of MDR and other incentives offered by government is also there. Second, payment has somehow become, with UPI or many other platforms, it has become a thing that perhaps you can't make money into the payment. So how are you going to make money? How are you going to be profitable in this particular domain, Anish?
So firstly, just wanted to also talk about, when you talk about the payments, we operate primarily on the payout leg of the thing, which is enabling a business to do salary payments, etc., which is what we do, like a 40 billion US dollars annually. Now, if you really look at generally payments as a space, as you rightly mentioned, it's a heavily saturated space. I didn't mention about this part when right. If you look at like the payment gateways, number of PAPG, the things, and then there is a POS players, and as you rightly mentioned, the UPI. And probably some of the founders' background, including me, come from working in companies like PayU, Citrus, and the payment gateway background. Right from the beginning, at least our view is that let's not try to make money on the interchange and the TDR from the payment space. Let's build the software and actually create value, make it as a SaaS service, wherein more than the payments become like an enabler part of it, but the real value is when you offer an account receivables or a payables as a solution. So today, the 70 to 80% of a business model is evolved around SaaS as a revenue stream, wherein we let a SME or a enterprise or a mid business pay anywhere between like 30,000 to 40,000 or up to a 3 lakh to 5 lakh a year for using their financial automation. And also the collection, the payment gateways on that space is like a really saturated. I would not say saturated, but there are like too many players and then too many brand names which a customer would go to. For example, if it's a startup, their first preference would go to a Razorpay, or if you're like they go to the retail merchant, they go to a Pine Labs or this thing part of it. So we don't really consciously doesn't focus on that part, but this becomes important. For example, when I'm actually onboarding a SME for payouts, and then they say that okay, now I can also do raise an invoice from the platform, and I want to add a payment link. That's where payments becomes like important for us. It's not more than revenue for us. We focus more as an enabler, and the revenue is primarily on SaaS. And then we do also have a lending business in partnership with IFL, where we use this data to provide lending to our set of SMEs and customers.
Sure. I mean, all the roads leads to or goes to the lending ultimately.
Yeah, again, here one more thing I want to tell. For us also, our reliance on lending is not more than 20%, and that's the way in with the business model. We focus on SaaS, and as you also one point to mention is that India is a very tough market for SaaS, because typically Indian businesses doesn't want to pay for this thing. So, but that's where we have been seeing like huge success in the mid SMB segment, rather than focusing on the long tail segment. The once you have like a more than 1 crore of annual turnover onwards, they have a budget that they put for managing their receivables, their payables, or financial automation, and that's the space that we target.
Yeah. So it's an important insights that one is obviously you're focusing on SaaS. Couple of fintechs also did that, but I think that's the interesting takeaway for me is the Indian market is not very easy to crack, specifically for the SaaS. So then going ahead, how is going to be your focus? You're going to be focused more on SaaS model because I think that will give you a steady revenue if you obviously play your cards really well, as you said, with mid-size segment of SMEs, or going ahead, you will increase your focus on the lending side as well.
Uh, Again, for like I mentioned about payments, lending would always be an enabler and it's an additional revenue. We will not look at like lending as a primary revenue because this will beat the purpose of what we try to exist, right? Now, we wanted to actually solve for the problems which businesses face through a SaaS-based approach, and our entire business model was based on that. Now, look, our core strength is that when the top two and the top three banks distribute our product, they approach us like a enterprise and they say they need a payroll software within their internet banking platform, or they wanted to manage their e-invoicing platform. That's where we make our money. So our biggest strength in the SaaS again is like there is a apart from the direct to SME business, there is a distribution channel which the banks are distributing. So the customers come to the internet platform which is managed by us, and then they realize that okay, if I connect my tally, I can reconcile all my transactions. Now for that, paying like a 10,000 or a 20,000, and when it comes to a larger enterprises today, they pay anywhere between 5 lakh to 15 lakhs a year kind of a thing as well. So definitely SaaS would be our primary focus, and lending helps. For example, we have a credit line product. So tomorrow, like a large enterprise comes or a distributor comes to the platform and they wanted to offer a credit line to their sub these things through our platform, and is raising an invoice, that becomes like a stickiness and the value add, and then it's also an additional revenue. So that's the way in which we are using lending. And even from our banking partners who also use our data to lend, not our data in their case, like the customers they onboard, when they have access to their tally data, when the customer connects their Shopify or Zomato or Swiggy accounts, then they can actually give a credit line to a restaurant based on the past data Excel. So that's a model that we found rather than like a traditional or the other digital lending players probably, which may look at like just the bank statement and the CIBIL scores and the bureau scores to lend a loan.
Noted your points, Anish. So let me ask you now one important question. So interesting achievements. 5 years, you became unicorn. You have number of SMEs, number of customers. If I'm not wrong, you also went through a bad time where you had to, let a couple of people go. Considering all this now and changes that is happening in the industry where the competition is heavy, fintech funding winter is also there. Where do you see yourself maybe in next 2 years? Do you see tough time for yourself, or do you see, the business will blossom, flourish? What is going to be your strategy?
So the good part is that we have a good runway of 4 years of a runway basically, which means like I'm right now not looking at like an external funding to grow the business, and the current last 8 to 12 months since we actually started working towards a profitable part, we are also now moving closer to in line with our target of moving to a cash flow positive this thing. So one, from a funding vendor or a we are not really dependent. We are not in the market. We don't even plan to get into the market. So I don't really think like, funding is something which will have an impact on us. Again, in terms of, like you mentioned about, we had to let go around 50-55 people, which every year we do in terms of performance. But on the other side, we have opposed that, this thing, we had actually hired another 100, 140, and even today, in the next 3 months also, we are in the process of like looking at around 40-50 open vacancies today that we have, which we have published openly as well. So I would not say the challenge, the bigger this thing for us as a company is like first stage is like, once you get into the profitability part of it. And probably I don't think at this point of time, we need to look at like an external funding. How can we actually organically grow? At least that's what, as an entrepreneur, I would, as a company, which we are actually looking into it. Obviously, like, things doesn't go always like it has been. That's what, like, at least from a entrepreneur's perspective, the company's perspective, the board's perspective, that's the way forward that we are looking at.
What kind of difference now the whole your business, the reputation, and the position will have going ahead, because now you own a license, you're a licensed entity, right? Because not everyone is still getting a PA. A lot of fintechs thought that it's perhaps a red carpet when you apply for a license, but it's not easy. I'm sure how tough it is. But now you own that license, right? So how the market is going to change for you, or it's not changing at all? How is it?
Definitely, it helps because especially in an industry which is called which the outside world called as neo banking, which is not a fully regulated market, regulated industry. Getting license from a regulator was definitely like at least we believe that was an achievement, because during all our interactions with the regulator and going through this entire process, we were able to actually convince that the value that we bring to the SMEs. Secondly, this license also helps in terms of strengthening our partnership with the banks, because probably we are seeing like what's happening around in the fintech industry, in terms of like banks are also more particular about whom they wanted to partner with us. So for example, like one of the largest public sector banks in the country, we had to go through those 42-point infosec and the compliance to get there. And now with an RBI license, when I approach a third bank or the fourth bank, now they feel like, okay, these guys have actually gone through that part of it. So that's the positive side of it. And definitely, even from a customer's perspective, we are actually seeing that, okay, we are able to build trust. We are able to actually get more products basically because of the license. At the same time, the license also has the other aspect of it, like this you become like more responsible. A small mistake can actually cost you much more than the license. Basically, it can completely impact your business. So you need to focus a lot more in terms of the compliance, the regulatory aspect of it. And on the other side, the number of digital frauds in India, or the cyber frauds, are like increasing at a very alarming rate. On one side, you are you are strengthening these things, but other side, the cyber fraudsters are also more smarter every day, basically. So definitely there are like challenges as well. That is the other aspect of having a license. But we feel like this license would definitely help us, and the way in which the industry perceives us have also been changed, because now we have to actually report every business that is coming to the platform, their KYC, their AML checks as well. So definitely it helps.
For sure. Noted your points. Give me also your take specifically on the current fintech industry. Are we going into the right direction, not just open, but in terms of the companies? Because I think we followed one race. A lot of people got into the wallet, then they got into the payment. Now many of them are heading towards lending, and the investors are not as I mean, investments are not as easy as they were earlier. Regulators have become active. So, do you think that the industry specifically or the fintech segment is going through a consolidation time?
So, Amol, taking a step back, like since you had interviewed more than 100 fintech founders, and definitely you would be completely gluing into what's happening in this fintech space, right? And probably in my personal view, post the demonetization and the digital wave is what the industry picked up. And after that 2 to 3 years of time, there was a lot of like fintech ideas or fintech startups that came in and majorly replicating the success of what's happening in the US or the European market. And then to support that thing, there's a lot of investment fund flows that came into the picture. And all this while, probably from a regulator side, regulator was doing, wait. I mean, they were actually closely watching it, but they were not really into these things. In the last 2 years is what probably now you have seen like the regulator coming up, framing policies, getting more involved into this part of it. And then on the other side, there is a lot of like this fintech ideas where a lot of funds were raised basically. And unfortunately, probably like, maybe because of the regulations or some of the other reasons, they could also they're not able to do justice to the investors, etc. Now, we are right now in a stage where I feel like it is actually a good stage for the real fintechs or the real entrepreneurs, because this thing. And also the other part is like anybody. So I'll just split it into two parts. When I'll come to the investment part first. But from anybody coming into the fintech space now, if you don't really focus heavily on the regulation, on the compliance, banks will not give you access. on the other side, the regulator will keeping on doing checks on you basically. So the real entrepreneurs with the real business models who focus on this thing, this is actually a good time. And I feel like we have very positive regulator. Whatever what we feel as restrictions are actually from a regulator side, when they look at like the consumer protection, that leads to a lot of trust and things like that. So that is the first aspect for the entrepreneurs coming to it. Secondly, even from an investor's perspective, yes, as you there will be consolidation happening. For example, people who don't get licenses, people who are not able to those things, and there are like larger players who have like a large capital already raised. Basically, they have a war chest basically. So you can actually see a lot of consolidation happening, and the ones which is really doing well in terms of the fundamentals of their business, they will actually see more and more funds. They'll be able to raise more capital, and they'll be able to really grow their business, because the fintech as an industry will not go away. I mean, when from a very layman's perspective, you really look at, right? But for the right ones who had actually been doing well in the segments, following the fundamentals, etc., they will definitely get more funded. So that's the way in which the industry will grow. And the third part is again, while the digital infrastructure, banks are also building more, exposing more APIs and the infrastructure. At the same time, they will also be more looking at like how the prospective partners they're going to partner with, they manage their compliance, etc. So definitely the fintech industry that we see versus probably what it was like 3-4 years, I feel like we are getting evolved and matured, and we'll see more matured fintechs, more established veterans in the fintech industry. When they start now, basically, it's also a good time kind of a things. And even the good ones will also get funding. So it may not be a flavor like what it was, because now from an investor's perspective, we have like too many emerging trends, whether it is AI or the things to look at it, part of it. But definitely fintech, I feel it will be much better than the edtech as a segment comparatively.
No, sure. I think that was meaningful, Anish. I think I'm almost done, but let me shoot one last question. So what makes you confident now? And what is it that you think will make fintechs confident going ahead? Because the situation changes, evolves every day, new technology comes, and I'm sure you have learned your lessons hard way. So your suggestions and recommendations will help maybe perhaps the people, those who are going to make the same mistake. So what makes you confident, and what should make industry confident?
Right. Yeah. So rather than a one sentence, I'll just probably split it into 3-4 points. Basically, the first thing which I'm getting confidence is more about the regulator. The more interactions when you have with the regulator, while some of us may have a very different view about the regulator actually looks at from has a vision, basically. Even talking about like bringing what's happening outside, simple things like they're talking about like now open banking is there. How do you actually bringing more sandbox? Even some of these departments putting their effort behind the startups in terms of try out their new innovation in the sandbox. Even after, we were also one of the participants of the sandbox, and even after the sandbox, the regulator is closely checking, hey, is there any bank where you're able to implement this thing? Is this something which we can actually do? So one is from the strong regulator. I feel that gives a lot of confidence to lot of us in the industry. The second part is like the way in which the industry has been evolving, both in terms of the consumers or the SMEs. Now they are looking at more adopting financial services. That is something which is confident. Even third is like specific to open is like, for a very long time, we thought like, okay, maybe customers doesn't want to pay for services. But when we started actually making our SaaS fees, earlier we started with a smaller SaaS fees, and when we started actually going to a larger ticket size, the adoption in which people were ready to actually pay for it, that gives a confidence that, okay, if you have the right product and if you're able to delivering value, you can actually do that part. So these were the few things like as an entrepreneur and the general, we are not really solved for a lot of the challenges that exist in every segment of fintechs. Banks need a lot of solutions, and banks are now looking forward for partners to build it for them. They're open for more collaboration. So generally, and then the talent that we have, because if you really look at like 4 or 5 years back, the people in the banks, they were a little bit, they don't really probably talk about technology term. But today, every banker is more smarter than a fintech. They talk about APIs, they talk about jargons. So I think we have like a good, ecosystem, which is the regulator, the banks, and there is like enough of problems to solve for, that actually makes me confident as a entrepreneur or as a part of this fintech community.
Sure, Anish. I think that was quite meaningful. And thanks for sharing your thoughts and not just typical statements. It was really nice to learn from you. And thank you so much for your time and sharing your thoughts on the FinTech Diary. Thank you so much, Anish.
Thanks, Amol. Great to be part of this show.
Yeah. And thank you so much for watching FinTech Diary on etbfsi.com. Stay tuned, stay connected. Thank you.